Welcome back to the channel. So in this particular video, I want to show you guys a trading system that I've been employing for the last 3 years quite successfully. It's not my system. I'm going to tell you where it comes from. I'm going to tell you how it works. As you can see by the title of this video, it's actually about a particular trade I have on. It comes from the system cotton. I'm short 2 contracts of cotton here. I'm up $15,219. I've been in this trade for about 3 weeks or so to have this gain. Let's just look at the chart of cotton to begin with. And so the dotted line, not the dotted line, but the line over here represents the price that I got in, the price that I shorted cotton. Now, here's the brilliant thing about the system. It does not use technical analysis, doesn't use indicators, right? None of the typical indicators that you know of. It uses none of that, okay? And I'll tell you exactly what it uses in a second. But so we ended up getting short cotton on May 12th on Tuesday. Today is June 9th. So it's about 3 weeks or so, approaching about a month. And the price of cotton has gone straight down ever since. As you could see, cotton kind of bottomed in February, March of this year. And after that went super straight up. If you were trying to short cotton at any point in time along here, you would have gotten run over. It even even went limit up on this particular day here. And we ended up getting short the day after it went limit up, by the way. So what's the system? Well, there's a report called the Commitments of Traders report released by the CFTC government agency. And every single Friday they release a report that goes up that has data up to Tuesday of that week. If we click on agriculture here, short format, this is what you're looking at, right? So in this case, we're looking at wheat, and it's going to tell you how much managed money, how much they're long and short contracts. So you can see they're pretty much net short. Other reportables, how much they're long and short, and then dealers, how much they're long and short, right? So you get this data every single Friday. Okay. Well, there's a market wizard out there. If you ever read any of the Market Wizards books by Jack Schwager, which 100% you should, there's about 5 or 6 books out at this point. There's another one coming up this year. It has pretty much all the legendary traders over the last decades interviewed. Well, in the very last book from a couple of years ago, there's a particular trader here, Jason Shapiro, who now also manages money. He manages, I think last time I saw something like over $500 million. And he manages it using the system that I'm showing you guys here today, okay? And at the same time, as he's managing money, he did start something called the Crowded Market Report. He started this many years ago. I've been a member of his since then. As far as I know, all the proceeds pretty much that from this business are used to pay employees to help run it and possibly even get donated. That's as far as I know. And what he basically does, he takes what he's been doing for the past 20 plus years. For starters, if you read that book, all their returns, Jack Schwager pretty much has to really, really verify their returns, right? Because his reputation is at stake. Jason Shapiro has been positive every single year for the last like 25 years. And some of the other stats that he shares, he pretty much doesn't have a downdraw that's above 10%. His downdraws are below 10% per year. And I think he's been averaging returns of like somewhere between like 10 to 15% per year. So phenomenal returns for a very small downdraw, considering the fact that we've seen heavy bear markets over the last 2.5 decades at different times, right? So what does he do? Well, he takes the data here from the CFTC and he made it simple for him to look at. And this is an example of cotton, right? And you might see here commercials, large speculators, small speculators. This is pretty much, you know, where it says dealers, this is commercials. Where it says managed money, this is large speculators. Where it says other reportables, that is small speculators. Now, when we look at this chart, you'll see for cotton, for example, large speculators for years have been short cotton, okay? And then maybe if we zoom in, we might see some periods of time, the yellow here, were small speculators. Small speculators pretty much being anyone that is not, if you're trading a particular size, you have to report your size to the CFTC. You have to, right? So if you're a big fund out there, you're long couple hundred contracts of cotton, you've got to tell the government about that. Okay, you have to by law. And this gets reported here. And if the government sees that, hey, there's all these other contracts out there that haven't been reported to them, well, it must mean that it's small speculators like myself, right? I'm short cotton right now. I don't have to report that to the government. I don't have to fill out a specific form for it. I'm automatically going to be put into the small speculator section because of the fact that I'm not reporting it. Large speculators have to report their positions, so we know about that. The commercials are pretty much going to be the opposite of the net positioning of the large speculators and the small speculators. Very often in markets such as commodities like in cotton, the other side tends to be the actual people that are, in this case, growing cotton, and they're hedging themselves within the market. Let me bring myself out. We can see in this example, right, that large speculators have been short for some time, and then they got super long earlier this year, right? Small speculators also got super long because we start seeing them the bars get much larger, right? And at the same time, commercials are getting way shorter. Now, the gist of this is that we always want to be on the same side as the commercials. We don't want to be on the side of the large speculators. We do not want to be on the side of the small speculators, okay? We want to look for opportunities on the other side of them because we're looking for opportunities to squeeze them out of their position. Obviously, once this trade gets unwinded by the big managed money, that's when we can see an explosive move. Now, one thing we got to pay attention to, we could see that since the beginning of March, large speculators have been getting long cotton. And as we saw earlier, I mean, they've been doing super well. The price of cotton has been shooting up like crazy since then, right? If at any point in time you looked at this and you were like, well, you know, they're getting long all of a sudden, let's try to fade them. Let's try to fade the small speculators. They're also getting long. You would have gotten your butt kicked, right? So how do we determine when is the right time to get into this? Now, before we get into that second part of the system, I do want to say Jason's team have taken this data here. Where is it? I'm sorry, right here. Have taken this data here and they've turned it into a private trading view indicator where if I click through here, you will see this exact same data here, okay? And on top of that, the data is indexed, and that's a key thing here. It's indexed depending on the product that we're looking at, from anywhere from like 3 months to maybe a year, depending on the product. And it basically shows us that based on this look back period, how long or how short are they? So when we can see that this yellow bar is at the very top at 100%, this tells us that based on the look back period set up for this product, small speculators are as long as they've been during that look back period. So let's say it's a 6-month look back period, while small speculators are maximum long compared to the past 6 months. And you can see here that normally we're always looking for a situation when large speculators and small speculators are both on the same side and that they're both maximum long or maximum short. As you could see here, we started getting that data all the way down here, right? It kept firing off. You can see the kind of the reddish bar here. So you might say, well, it's been firing off for a while here. If we took any of these trades, we would have gotten burnt 100%. Sometimes it works right away. Sometimes you would get burnt. That's why we have to use a trigger to get us into this trade. And that trigger is a news failure. And that is what we use to actually get into this trade. And using a news failure is super, super important. And what is a news failure? Well, we're looking, in this case, since we're looking for opportunities to go short cotton, we want to look for days when there is a report that comes out about cotton that is clearly bullish. It pushes the price of cotton up, for example, but then cotton fails to hold on to those gains and begins to reverse. That tells us that, wait a minute, there may not be enough buyers left up here. And once the buyers are currently holding cotton, once they see that the price is struggling to go up, maybe that's when finally we'll see a counter trend move. Now, the Crowded Market Report, they do have their own Discord. And this is what they put out here on May 12th. We had a WASDE report, again, another government report that's released, I believe, once a month. Basically shows you the expected crop, input of a particular crop, and any future expectations and so forth. While there was a bullish report, There was a bullish report. I mean, as you could see here, the quick summary here, that there was tightening supply. Obviously, if there's tightening supply, that's bullish the price of cotton. Okay, if the government's expecting the price of cotton to increase or the supply to be lower than expected, they see that this would be the smallest stock level in several years. You expect the price of cotton to go up, right? And that day, we did trade a little higher, okay? And then we finished red. We finished red. We finished down on the day, even though we had a positive WASDE report. So now we have two things confirmed for us. We have the fact that the COT, Commitment of Traders report, is telling us that there's a bearish opportunity here. Second of all, we have that news failure. Cotton did not go higher on positive news. We got short on that day. And since then, the price of cotton has gone straight down. Notice though, the very next day, it did try to push up a little higher. And guess what would have happened here? Had cotton pushed up higher and closed above our entry here, that would have stopped us out of the trade. And we would once again wait for another news failure as long as future reports stayed bearish, future Commitment of Traders reports. But it finished below and went straight down, right? This is like a picture perfect trade. That's a trade we've been in since the start, okay? Pretty much very little to no down draw. So when do we ever get out of this trade, right? So when do we get out of this trade? Normally speaking, it is when, this is how Jason does it. And his viewpoint is once either the large speculators or the speculators, once they, in this case, since we're going short, once they surpass that 50 percentile mark, right? And they're pretty much net, they're pretty much more so less long than they were at the peak. That's when we exit. So once this yellow dot, if let's say on Friday report comes out, and again, that data will go up to today, Tuesday. And if this shows like a 45 for small speculators, he would get out of that market, get out of cotton as soon as possible at that point in time. Pretty much when they go neutral here. That's when he would personally get out. Does that mean cotton has to stop falling at that point? No, but in his eyes, the risk and reward is a little bit different because the trade is simply not as crowded as it was before, hence the name crowded market report. But other than that, this trade has been really good for us, for the whole community. I just want to share this to you guys. I know a lot of YouTube is kind of stuck around the whole idea of like technical analysis and indicators and this and that. And notice that at no point in time did I use any indicator here, any technical analysis whatsoever. And the only indicator that I've been using here is the fact that we just simply take data, this data here, and it's simply overlaid onto the trading view chart that way we can easily look at things, you know. Now, me personally, again, I don't necessarily have to follow the way Jason is doing things. Me personally, I'm actually probably gonna exit my cotton trade at this point in time. Personally speaking, am I breaking the system? Yes, I am. I mean, some people get out earlier, some people add on to their positions. I'm gonna get out of this trade right now only because of other things inside my portfolio that I'm currently managing. And we're gonna do that live, right? Now, may I regret that 100%? I mean, keep in mind, there's no guarantee that at this point the price will go up, the price will go down. Absolutely not. We entered here, we're down to 71. We got an 87. We got in at 87. It is Tuesday though, which means that, you know, Friday's report will contain the results of yesterday and today. We can see that as price had begun to go down, small speculators have become less and less long. We could argue that maybe they're now chilling at like 55. It's really difficult to know. Obviously, always speculating how this moves around. Sometimes you see a market where the price goes up, a small speculator starts selling into it. That also happens. Show you guys an example of like NASDAQ here. You know, like look at small speculators here. Like NASDAQ has been going up like crazy, right? And small speculators have not been crazy buyers. I mean, look at large speculators, okay? They've also haven't been crazy big buyers in the futures market for NASDAQ. Look at this. They're literally as short as they've been over the last, I think for equities, it's like a 6-month look back period. Like, look at them, you know? Commercials are long. I mean, if anything, the COT report is telling us that we should be looking for longs here. right? So back here last year, right? Notice this is a little bit different here. Large speculators are super long up here. They were super long up here. They were long up here somewhere, right? And again, just because they're long or short, and just because there's a signal to be long or short, it doesn't matter unless there's an actual news failure to go along with that. I've got to drill that into your heads, because if you just try to follow the fact that it's crowded, you're gonna lose. You can get stopped out very, very often. The news failure, I would say, in my opinion, is the number one important thing. The second important thing is if it's crowded. The crowdiness tells us the risk reward, like how much juice is there to squeeze. That's what the COT report tells us, that if the trade works out, there's a lot of juice to squeeze, like with the cotton trade, right? A lot of juice to squeeze. It's crowded. The news failure tells us that, hey, there's a trade opportunity here, while the COT report tells us, hey, there's a lot of juice to squeeze if the trade comes about, okay? That's important to distinguish between the two. Okay, that being said, so I'm doing this in this video. I'm actually gonna go and I'm actually gonna close this cotton trade live with you guys here. And so 2 contracts. We'll do the mid price here. See if we can get filled, and there we go. And that's it. We're officially out of the trade. Very, very successful trade. And again, for a lot of you guys out there that's struggling and figuring out how to be profitable in this market, what works, what doesn't work, number one thing, go pick up the book of Unknown Market Wizards. After that, head over to Crowded Market Report. If you use the code EDGE15, I should have it on the screen right now. I think you get 15% off on your membership with them. You're actually, plus you get access to the Discord. You can talk to Jason yourself. You learn lessons that you've never really learned before, and actually see what it takes to be a profitable trader, and actually see a method that can be used successfully. I think if I look at my, just kind of show you guys here, if I look at my account, I'll blur up my name here and everything, but you know, it's been 3 years now, over 3 years that I've been a member with them. And I wouldn't be, obviously, if I wasn't doing well with them. But that's why I wanted to share. I wanted to share this position with you guys, how it worked out, what the thesis was behind it. I will also say there's other services online that do kind of take that data from the from the Community Traders report, and they also display it to you in a nice way or something. Like, I even had this opened up here, right? You could look at, you know, Barcard kind of does something maybe a little bit similar to that. Do you see this? So this is not necessarily unique. What's unique is maybe the way it's presented. What's unique is the addition of news failure. What's unique with the service is the fact that you kind of get into Jason's mindset and see, you know, how it is to trade successfully and manage people's money, you know, over the last 20, 30 years. That's what you kind of get out of that service. If you have any questions for me, let me know in the comments below. Thank you guys for watching and listening. Till next time.